Welcome to this Killick Explains video, and this week, gold, a metal that seems to be in the headlines all the time. Okay, just as this video is being made, lots of talk about gold reaching new highs. Will it stay there? What could happen next? So let's take a look at it. What has been driving the gold price with a kind of hint of, and if it stops driving the gold price, watch out. And also I'll be covering where I see gold in the great as the pantheon of investments. So, with no more ado, I like to start with the quote, "Gold is money, everything else is credit." So said JP Morgan, the original JP Morgan, back a few years now, it's fair to say. So, with that in mind, gold was clearly pretty important to JP Morgan. It's been used throughout history as some kind of store of value, medium of exchange. So let's look at it in the context of modern markets now. Now, what is it? What is gold? It is a precious metal, so it has value because you can make nice stuff out of it. All right, it's a useful commodity. It has some industrial uses, not as many arguably as it used to have, but it has some of those. But is it an investment? Do the two things on the left make it something on the right? And I'm a little bit doubtful, I have to say. Some people will disagree with me, but that's the nature of markets. So, Tim, how can you be a cynic when the chart looks like this, you might be saying, the long view? So there are lots of things people like to compare gold to, because it's kind of like, well, gold's going up, but versus what exactly? So the US dollar is a classic example, and the relationship has tended to be, the reason I put this chart up is, obviously you can see gold, by the way, is the green line, and the US dollar is the purpley one. And clearly, and we'll come back to this in a moment, we've had gold rocketing recently, right, coming back to that in a moment. But over time, the relationship has tended to be inverse. And what I mean by that is you can see the lines kind of widen together, narrow together, widen together. All right, and that is because, and I'll summarize this in a moment, gold is priced in US dollars. All right, so what's happening to the US dollar tends to affect demand for gold. If it gets more expensive or gets cheaper in dollar terms, it moves accordingly, all right? But that inverse relationship has changed recently, and I'll come back to the far right-hand side in just a moment, all right? But keep that in mind, keep that thought in mind as we go through. So let's summarize what I'm saying there. Gold is priced in US dollars, fine. So when the dollar rises, it tends to fall and vice versa, gets more expensive, all right? And that has traditionally meant there's been, if you're looking at the relationship between gold and the US dollar, you can look at the relationship between gold and other things. There's tended to be an inverse relationship up until recently. And it's important when we're thinking about what's been driving the price recently to bear that in mind. All right, so sometimes, and that's my point, the two start to move together. Slightly more unusual in historic terms, but that's what we've been seeing more recently, okay? And that means something else is going on. All right, something other than the fact the price of gold is US dollars is starting to affect demand. And people often say, well, if there's demand for a safe haven, if people are worried, for example, that tends to mean the dollar starts falling, and that tends to push the price of gold up as people flock to it. But is that still the case when we're seeing the two move together? So if the dollar's strengthening and gold is still going up, despite the fact it's getting more expensive, arguably, what's going on there? And that's kind of my point coming up now in a moment. Okay, so this is a shorter view. This is a zoom in. This starts in 2020, okay, rather than way back and finishes in 2025. And really what I'm trying to show you here is, again, gold is the green line. Perversely, you might think, odd choice for gold, but let's say gold is green, right, begins with G, and the US dollar is, again, the purple line, but I've zoomed in here. And what we're seeing here is more of a correlation between the US dollar and gold. It doesn't look like it's a perfect fit, all right? But we're not seeing this kind of concertina effect that we were seeing in the previous decades on my longer slide. And I'll be coming back to that slide in case you missed it in just a moment. So that begs the question, what are we seeing there? Have the supply and demand forces for gold changed, in other words? Now, back to basics for a moment, and then I'll get back to my point I was making just there. As an investment, so people say, yes, I like to hold gold as an investment. Is it really an investment? Like some other things, could mention cryptocurrencies here, but won't. It doesn't pay any income. And that makes it quite difficult to value, by the way. If you're going to value a property, you take the future rental income and discount it to get the price. If you're going to value a share that pays dividends, future dividends, discount to get a price. There's nothing to discount with gold. There's no interest. And there are costs of carry. All right, gold is a bit of a pain to store, insure, because it's quite nickable, and so on. Costs of carry are just literally costs people have to bear and will charge you for holding the stuff securely and safely. All right, and in terms of getting hold of it, there's a bit of a debate about what the best way is. Do you buy physical gold in bars and sort of lock it away somewhere? Jewellery, for argument's sake, shove that in the top drawer, I don't know, in a safe. Do you buy miners? Now, they're shares in mining companies, so they're not going to perfectly track the gold price, but might be a sort of proxy. Or a lot of people have been buying funds recently, exchange-traded funds, exchange-traded shares that claim to track the gold price. And the demand for those has created a bit of a mini boom in its own right. So maybe there's one factor that starts to explain why gold has rocketed quite as much recently as it has done. Now, fans say, yeah, I like to hold gold. It's insurance. Insurance against what? Basically, gold is solid, it's valuable, it's been in demand for centuries, so it's what you want to hold in case the world goes to pot, if you like. It's a diversifier. It doesn't seem to behave exactly the same way as other things like shares and bonds and so on. And it's an inflation hedge. People say the great thing about gold is there's only so much of it, all right, around, there's only so much on the planet. So it's quite a good way of hedging. If you've got it, it's a real asset, hedging changes in broader prices. But, okay, and here come the three buts, and this is where you're getting closer to my argument, which is I don't love it as an investment. Visibility is a problem. Do you know where all that gold is? Some of it's held by central banks. Some of it is sitting in vast stocks of jewellery in places like India. Some of it, we don't fully know exactly where it is. We've got a ballpark idea. It can be volatile. All commodities can be volatile, and I'll try and show you that on the chart again in a moment. Yes, it's been on quite a roll recently, but crikey, does it wobble on the way up? It's not unique in that. And then valuation. Again, my point of what exactly are you using to price gold? Is there a sense at a certain point that people are trying to justify price rises they don't fully understand? So, if we're looking for things to explain why people want gold, safe haven demand traditionally, when the world's a scary place, people go, hold gold. You can't argue with gold. It's always worth something. You can physically present it in a transaction, and it's always had a minimum value. And inflation. Again, that idea that there's only so much gold around, so it is a kind of protection against central banks devaluing currencies, inflation, and so on. Central bank activity could be the missing link to explain why it's rocketed quite so fast recently, up to the $4,000 plus an ounce from way below that years previously. In other words, China has been buying huge amounts of gold, storing it, hoarding it if you like, and of course you've had quantitative easing. All right, that's been reversed back into quantitative tightening. You have money printing, letting loose vast amounts of liquidity, some of which could have seeped into the gold market. All right, so there are any number of factors at work, but what people are trying to say is, this argument that it's just a safe haven, it's insurance, doesn't quite hold water when you look at recent performance. There must be something else going on. And so I'm just trying to hint at what that something else might be. But it makes the gold market quite a tricky one to read sometimes. Now, back to that long view. So you might be thinking, well, all those factors have pushed gold up, and we look at it go. So this is coming up to recent times. I mean, look at it go, rocketing, all right? If you can read that line. But here's my point, that's all relatively recent. So people are saying it's safe haven demand, it's Chinese central banks buying it and pushing out demand, it's the availability of new products that allow retail investors into gold, it's inflation worries, but how does that explain the rest of this purple line? I mean, this all looks, that's not very exciting. If you held gold over that, so 10 years or whatever that is, roughly 10 years, you made virtually nothing. Factoring in inflation, you lost money, okay? Again, if you bought whole gold and held it to there, pretty boring. Nothing really doing. And to put some stats on that, if you like, if you go back to say 1980, for you've got roughly 4 decades since then. 3 of them, gold would have lost you money in real terms. It only really kicked in and made some decent returns, some pretty spectacular returns in the last one. So if you take that view, the very long view, you could say actually as an investment, gold's been not terribly exciting. I mean, over a 40-year period coming up to where we are now, a pre-inflation return of around 3% compared to, say, the S&P 500 and more like 11. All right, so you can see that there is a long-term view that says, take out some of these short-term factors that have generated this recent spike, and what have you got left? Okay, and that's just worth bearing in mind. That's why I'm less of a gold fan, because I'm old and can remember stuff, all right, than some people seem to be recently. Now, on that note, I'll stop talking about gold. Probably heard enough. Just want to reference some other sources of information. I have done other videos around this topic in the past. So you've got Killick.com resources for those other videos, for my how-to guides, and occasionally we touch on gold in our quarterly flagship magazine, Confidant.